What's going on, folks? Stock market weekly recap. Hope you're excited. We're gonna have a good time, okay? Look, I gotta talk to you about this week. I talked to you about the good and the bad. This week, not so great. We're gonna talk about the Robinhood Portfolio, the M1 Finance Portfolio. See how the general market did, all three indices that we mainly focus on, and then we'll see a little couple of news articles. See what happened this week. So let's get right into this, okay? So, the Robinhood Portfolio, as you can see, it did crest over 39,000 this week and promptly fell right back down in a day. I mean, what do you expect? This is it's a rough time in the market right now. There's a lot of instability, not a lot going on. So we're down technically 0.54 on the week, which I'll take as a big win, and you'll see coming up why I think that. So what all did we do this week? Let's get into history, and we'll show you what happened this week. Well, fantastic stuff as far as Iron Mountain. Dividend of $21.66. Love Iron Mountain. Quarterly dividend, it's very nice. HPQ as well. JEPI also dividend here. We bought $50 here with our $50 deposit. We bought $50 of QILD. Kind of, again, I'm working on investing in a lot of income-generating assets, mostly because I think we're in a turbulent time in the market, and I don't think it's going to be going anywhere. There's obviously the looming fear of inflation. It's not going anywhere. Crude oil going to be continuing to be a nightmare situation for us. Look, the economy is just not in a great spot. So, obviously, as a result, and with rates increasing, look, I think it's best to invest in some income-producing assets, so that way if the market trails, I'm still making money, even if the share prices go down. So that's kind of where I'm at with that. And if it does go down, I'm going to be willing and ready to buy quick. Be excited for that. So M1 Finance, what happened this week here? Well, on the week we were down 0.85. Should mention too, Robinhood Portfolio up all time now 81.74%. Worth mentioning, $17,400. So very nice stuff to see there. Very nice. How are we with the M1 Finance? We crested over 34,000, obviously, with this one for the first time, which was exciting. And again, we did fall from there. So nothing crazy. Down 0.85, as you saw. Market lost pretty big there. Obviously, didn't do any selling. Anything crazy at all. But yeah, that's that all time now. 152.62% when you look at money weighted. If you look solely at the holdings, we are up 47.77%, but that's because we have a lot of dividend companies, and when you account for that, the gains are very nice. Okay, very nice. When you account for dividends we've earned as well, so we love to see it from a money weighted standpoint. What did we do this week? Well, let's see. PepsiCo dividend, Vici, a nice dividend. First dividend I've had since I opened this position. Really excited for the future of this company. And these share prices, I mean, it's cheap. They're trading cheap. Iron Mountain as well. And our morning buy is just a normal $100 this week. Nothing crazy. More income-producing assets. Believe it or not, I've been buying them for the last really entire month. With some instability, and we've been able to bolster this dividend yield quite a bit on this. I'm very excited about that. More Prospect Capital, more Brookfield, more VYM, more ARI. Love this one. A lot more NRZ. Love NRZ too. This is going to be a fantastic dividend that we receive this month. You're going to be waiting for it. It's going to be lovely. I'm very excited for it. Amazon, $27. Did buy a little bit of Amazon, Main Street Capital, and Iron Mountain here. Just a little bit more. But again, mostly income-producing assets. Because as you're going to see, the NASDAQ's been struggling, and it's been one that has gone bonkers over the last 5 years. And we're kind of seeing a point where it's kind of leveling out, and the other indices might be catching up. So how did the indices do this week? Well, the Dow Jones here on the 5-day, we'll pull up the chart. So that way you have a picture. It looks just like my portfolio. What a shocker. But down 0.29. On the 5-day, and on the month it's up 0.72. Now if you look, we're actually able to not beat it on the M1 Finance, but we have beat it in terms of our Robinhood Portfolio, really excited about that. So, but we did technically underperform them in terms of the week, though. So that's something to mention. Now, the S&P 500, even rougher of a week. So we were able to beat this in both portfolios, thankfully. And on the 1 month, it's down 0.74. So we're outperforming the major indices here, which I feel good about in that aspect. And the NASDAQ, a rough week, one of the worst weeks in over a year. So crazy stuff. 5-day down 4.53, and I'm pretty tech heavy, and that's why I've kind of been straying away from being super tech heavy, as you might be able to notice. So that's why on the week I'm not down quite as much as the NASDAQ as a whole, and on the month down 4.44. So you see that and you get excited. We're heavily outperforming the NASDAQ, and that makes me feel happy. Okay, we're outperforming the indices. This is what it's all about, folks. That's why you follow me, okay? Because I can lead you to the promised land, okay? Just takes time. Let's get into the news, though. The most important news article, obviously, we're sharing today is going to be the jobs report that came out for December. Look, it was ugly. Ugly. So, December payrolls came in at 199,000 compared to an expected 400,000 additions. 400,000, half. I mean, we hit half of that goal. It's horrific. Now, unemployment rate did fall to 3.9 versus an expected 4.1. And why is that? Well, that's because no one wants to work. All right? So this is kind of a misleading line here because the unemployment rate is only contingent on the labor market. And if people are dropping out of the labor force, then this will decrease this number even if they aren't adding jobs. So really terrible month. Again, I already know, you know how politicians do. They're going to tout this number, 3.9%. But you suck, right? You're terrible. It's been a horrible recovery since 2020. A horrible recovery in terms of unemployment. We've done nothing to get people back in the workforce, despite raising wages massively. I mean, every company is raising minimum wage by a massive amount. Every state is. Yet people still don't want to work. It's because you teased them with a lot of government programs that offer a lot of free stuff for doing nothing. Nothing. You can claim that you've got long-term impacts from having COVID. And because of that, the government will give you money every single month. Unemployment benefits were incredibly too high for a long time, way beyond when they should have. So people don't want to work when they know they can get free money and suckle at the teat of the government. Is that ban-worthy? Do I get banned for saying teat? Look, the government is doing nothing here to really help this, and that's why this number may go down. But this number is not looking good because people don't want to work right now. They don't want to work because they don't have to. We gave them too much money, and once they run out of that money, ideally, because they saved like no one's business. Again, U.S. savings in terms of household savings is increased by massive amounts. People are just saving all this free money they got from the government, and they're doing nothing with it. So, look, that's my rant for the day. Government's got to get this fixed. I mean, it's a nightmare. We're doing nothing to get people working. Then we offered remote work for a lot of people, and a lot of people aren't going to want to go back to work if they're not allowed to work remote. Just nightmare stuff here, okay? That's why there's a labor shortage everywhere. So just keep that in mind. We had good news for Tesla. That's right. Good news for Tesla. Tesla here, that's right, did really well in terms of its delivery numbers. They delivered more than 308,000 vehicles, which is 40 more than the Wall Street estimates average. Very nice. It also delivered 936,000 vehicles over 2021, which doubled 2020's total. So really nice there. They're doing great things, great numbers. Looks very good. So great for Tesla. It's been having really trouble with the stock last year. We had a fantastic, oh my gosh, we love this. Old Theranos CEO, Elizabeth Holmes. That's right. Finally, the jury has made a deliberation, which it took forever. She has been convicted of 4 of the 11 counts. Should have been more. Let's just be clear. Absolutely lied to people. Just a nightmare of a woman. Exchange fraud. I mean, she's done it all. It's wild stuff. She was convicted on 3 counts of wire fraud and 1 count of conspiracy to commit wire fraud, but acquitted of her 4 other charges. So that's something. But she faces 20 years in prison and $250,000 of restitution. Not nearly enough. Okay, this is ridiculous. She should be paying a lot more. A lot more. Okay, she did terrible, terrible things to a lot of people. A lot of investors out there, businesses even too. She did a lot more than $250,000 worth of damage to people, okay? Goodbye. Enjoy your prison. Now we're waiting for Trevor Milton, okay? And GameStop made it back in the news too. After they've talked about getting into the market of NFTs and cryptocurrency. Which, again, look, this company's garbage. It's garbage. It's a horrible company. They've got nothing going for them. They're just trying to stay relevant in a world in which they've been left behind. So, screw GameStop. I'll see you later.